record this session, so you'll have access to it after today. Welcome to the Research Administrators Virtual Academy, RAVA, the February edition. We'll be learning more about audit findings and how to manage them strategically, and we're joined by the Research Foundation's internal audit team. So before we turn it over to them to begin their presentation, just want to make sure you are feeling comfortable in the Zoom tool. Many of you have participated in the past, so you may be aware you can test your audio and video settings using the option in the lower left corner, audio settings, and there's a test button right there for our microphone and speakers. Feel free to use your webcam, turn that on if you'd like to engage with the audience, and you can enter your questions in the chat box throughout the session. We'll be monitoring the chat throughout, and we'll have you ask questions using that chat box. If you'd like us to unmute you, just ask, and we can do that. And we are already recording. So with that, I'll pass it over to the RF team.
Thank you, Carolyn. This is Kathleen. Hoping everybody can hear me. Before I introduce our presenters, I have two reminders, and they're so important that I'm going to say them at the beginning of this RAVA session and then again at the end. The first one is that we want to make sure you've all registered for the symposium, which is April 3rd and 4th here in Albany at the Desmond. And as a reminder, that April session will be actually for RAVA participants. We've got a room. I don't exactly know what time yet, but we are all going to meet together for those who can travel to it. So please remember to register. We only have a few more days. And secondly, I need a headshot. And so what we're looking for is like maybe a little bit of a collage of your beautiful faces to put in our program. We're talking about the mentoring program and RAVA. And I'd love some of you to actually fill the page with your beautiful smiling faces. So please send me a headshot if you have one. So those two things are my reminders. I think now I'm just going to turn this right over to Ryan, Brian, and Carrie. They're from our internal audit team. I asked them in, I think, the late summer to try to put together a program because a few of our operations managers said, you know what, audit findings and how to manage them strategically on our campus is a really important boots on the ground, nuts and bolts program that we could benefit from. And since this is being recorded, we thought, well, let's go ahead and put it in the RAVA curriculum. And thanks to Ryan and his team, they really put together a very thorough, yet enough open space for you to join in and have an interactive session. So thank you all for putting this together. And I'm gonna let you take it away.
Great, thank you, Kathleen. And good afternoon, everyone. So I am Ryan Farrell. I'm the Vice President for Internal Audit, and I'm joined today by Carrie Gilchrist, who's our Internal Audit Manager, and Brian Gasparo, who's our Associate Auditor, for this session on audit findings and how to manage them strategically. Who's not going to have the advance this? Sorry, I'm having a little bit of difficulty advancing the slides. So before we get into the core of the session, I wanted to go over some of the audit objectives that we've come up with for today's session, and hopefully they align a little bit to what you're expecting. So the first one would be to understand the most common type of audits that we may encounter here at the Research Foundation. Now, there are a lot of different types of audits that go on. We've been involved with various audits at the campuses, whether it be a fiscal review, programmatic, regulatory or compliance, and some investigations. But we can't focus on every type of audit that's out there. So what we want to focus on for this purpose of this presentation is on these performance or incurred cost audits related to sponsor awards. So this will likely be tied more to the post-award activity at your campus. The second objective would be to understand the most common audit issues facing research institutions, coming from those performance and incurred cost type audits. And the common audit issues that we plan to discuss are going to be coming directly from the published federal OIG audit reports, the published single audit reports, and some of our own internal audit work that we do here at the Research Foundation. So our goal was really to keep the audit issues, I think, kind of relevant and timely to the work that you all do in research administration. And then the last objective would be how to manage these findings strategically. Now, as an internal audit team, we talked about this term strategically and what it means in relation to managing an audit finding. And what we want to emphasize to you is the best way to manage audit issues strategically is on the front end, right, with a focus on the proper internal controls, right? So this is meant to prevent, common audit issues from occurring in the first instance. So that is going to be, I think, the theme throughout this presentation, this idea of the proper internal controls at your campus. So now if I were to summarize, at a very high level before we get into the entire presentation on how to manage audit issues, it would be this. One, first knowing, what are the common audit issues out there that you're gonna face likely in an audit report. Understand the requirements that are covering those audit issues, and then why an auditor may question them to begin with. And then 3, what controls need to be in place to manage the risk of noncompliance, using not just OMB guidance, but our own RF policies, procedures, and forms. And then at the very end, we do have a slide on how to defend or challenge audit findings. So suppose you have, the best internal controls in the world, but something, falls through the cracks from a compliance standpoint, or you have, an overzealous auditor who thinks everything's an issue. So we're going to take you through some steps on how to address those audit observations. So here's the agenda for today. So first we'll get into a little bit of background on 3 types of the most common audits that we kind of experience here at the Research Foundation. 1 being sponsor audits, 2 being the single audit, and then 3, the internal audit work that we do. Then we'll roll into some of the common issues reported through those audits. And we do have some case studies, some actually published OIG audit reports that we want to walk through the observations from those. 1 being from the University of Kansas, which I believe is an NSF OIG audit report. We're going to go through a Health and Human Services OIG audit that happened actually right here at the Research Foundation a couple of years ago. And then some of the common audit issues reported through single audits across the United States and different research institutions. And then we'll go into the steps to address any audit observations. And then our last slide would be some emerging challenges and trends, at least from our perspective on an audit front. So first, we'll kick it off with sponsor audits. Now this could be any entity who provides funds to carry out one of our awards. And it's not just federal or state. Could be your industry partners as well. But we're going to focus on federal and state, since they are the source of about 75% of our sponsored program expenditures here at the Research Foundation. So the objectives of all sponsor audits are very similar, in that the sponsor is looking to ensure we are complying with the terms and conditions of an award, and that the dollars are being spent on legitimate project costs. So most of you have probably been through an audit of this nature, so I don't think the type of things that they're looking at would be any surprise to you. So if you look over at the federal side, we've highlighted different sponsors that you might want to be aware of. So 1 would be audits initiated by the federal sponsoring agency, such as NSF, Department of Ed, NIH, where they're coming in and looking at our records. And generally, these sponsor audits are focused on a specific program or a specific grant or contract. And more often than not are done as these desk reviews. So where they're requesting and reviewing backup documentation to support expenditures on a voucher we've submitted or a financial report that we've sent. Now, we've had non-financial reviews by federal sponsors as well. I know NSF just recently was here doing a business system review. I have been involved in an audit of our oversight of RCR requirements. But I think fiscal reviews are by and far and large the most common type of audit, probably since everyone cares about the money and sort of where it's being spent. So audits may also be initiated by the federal sponsor's Office of Inspector General. So I've listed two up there, one being Health and Human Services OIG, and the other being NSF, Office of Inspector General. Now, OIG offices for all agencies, their goal really is to protect the integrity of the government's programs and to promote effectiveness and efficiencies to reduce, eliminate fraud, waste, and abuse. Now, two of the most critical ones for the Research Foundation are the OIG offices of Health and Human Services and NSF. So Health and Human Services is the RF Cognizant because that is where most of our federal funding is coming from. And they have several funding sources under the HHS umbrella. So if you have awards from NIH, FDA, CDC, this is all falling under Health and Human Services OIG. So if there's ever going to be like a broader review or broader reach of an audit of federal programs at the Research Foundation by an OIG office, it's most likely going to come from Health and Human Services, as it has in the past, and we'll go over that a little bit later in the presentation. And I also threw NSF OIG up there as well. They have a similar purpose and scope as Health and Human Services. They are the RF's single biggest source of federal dollars at the RF. So it's good to know sort of what they're looking at and what's on their work plan as well. Now, each of those OIG offices have their own work plan that you can actually go online and review them to see sort of what's on their radar, what they plan to kind of review over the next year. And if you look at the past activity for each, you'll notice that NSF is actually far more active in the audit of research institutions than Health and Human Services. So in 2018, I think I read, 9 or 10 reports of higher ed research institutions' cost incurred audits, and maybe 2 from Health and Human Services. Health and Human Services, I think, are primarily focused on Medicare and Medicaid type programs. That's why I think NSF is an important one, because they just seem more active in the review of audits. And they do a lot of contracting out. So it may not actually be NSF program people doing the audit. They hire a lot of independent contractors to do these incurred cost audits for them. So if you were to look online and kind of go through the OIG fiscal year 19 audit work plans, there's definitely some overlap between the two OIG offices related to higher ed. And 2 key areas that I think you may want to be aware of are, one, the colleges and universities' compliance with cost principles. So these are those performance and incurred cost audits. Now, the work plans won't identify the actual institutions that are proposed for audit, but what it does say is that they'll do a number of them throughout the year. So we could be selected at any point for a preferred performance or incurred cost audit. And these audits, with the primary objective being, looking for improper spending or non-compliance with federal requirements. And then the second key area on their work plan is this idea of review of single audits. So what they're going to be doing here is they're going to be going online and reviewing the quality of the reporting package for single audits submitted by institutions across the nation. And what they're looking for is the adequacy of the institution's management of federal funds. And this is really going to help the OIG offices identify entities for high-risk monitoring. So that's why it's always pretty much important for us to have sort of good internal controls, no findings, a clean audit report, because you don't want to kind of get on the radar of these OIG offices. And then the other side, we have state sponsors. I think state sponsors working here at the Research Foundation is probably the most prevalent sponsor audit that I deal with on a day-to-day basis. And again, they're mostly desk reviews, doing contract compliance, reviewing backup documentation to support expenditures on vouchers or financial reports. Really with the goal that we're following state program guidelines, the state awards, and in most cases, they follow some of the very same requirements as the federal rules do. So that's sort of a general overview of sponsor audits at the Research Foundation. So I'll move over to the next type of audit that we encounter here at the Research Foundation, which is the single audit. Now, the requirement for a single audit is defined in uniform guidance under subpart F. You might refer to it as the A133 audit. People still refer to it as that, but that is the name under the old OMB A133 circular, which is now defunct. So now it's just called the single audit under uniform guidance. Now, subpart F outlines not only who is required to have a single audit performed, but it will also outline the roles, the responsibilities, and procedures in carrying out the audit. Both for the auditee, such as the Research Foundation, and the auditor, who would be KPMG here at the Research Foundation. And the single audit, what it's meant to do is provide assurance to the federal government on compliance with requirements on federal awards by non-federal entities. And it's also meant to reduce administrative burden, right? So each federal agency doesn't have to come in and conduct their own audit of their federal program. So the single audit is pretty much a catch-all for all of our federal programs here at the RF. Now, a single audit would be required for any entity that expends $750,000 in federal dollars during one fiscal year. So for the Research Foundation, to put it into context, we have roughly $500 million in federal awards annually, both between direct and indirect. So we're well above that $750,000 threshold and are subject to this single audit every single year. And as an entity, we only have one single audit report that covers all SUNY research activity across the campuses. So a University of Buffalo doesn't have their own single audit, even though they have a lot of federal research activity. Stony Brook doesn't have their own single audit. It's all under one Research Foundation single audit report. So single audits are performed by independent auditors. So in our case, like I said, the single audit for the Research Foundation is conducted by KPMG. And what KPMG is going to do is they're going to express an opinion. They're going to express an opinion on our financial statements, on our internal controls, and more importantly, in relation to the single audit, an opinion on whether the RF is in compliance with the types of compliance requirements described in uniform guidance that could have both a direct and material effect on major federal programs. And how they determine their scope, they'll do it based on risk. As an entity, are we a high risk or low risk entity? And the major federal programs that they review, that will be based sort of on how much activity we have on our schedule of federal expenditures. So it'll change every year based on what they need to do to cover, have enough risk coverage for their audit. So for this year, the fiscal year 19 single audit is expected to kick off sometime in April or May. So if you're in a campus that's going to be impacted by that, expect KPMG to sort of test some of your awards, in the June, July timeframe, and hopefully wrap up the single audit in December. There's also this thing called the OMB Compliance Supplement, and I'll discuss what the OMB Compliance Supplement is on the next slide. But when you think of the OMB Compliance Supplement, and you hear that term, think of it as a roadmap, for an auditor to follow when they're conducting a single audit. It allows them to be sort of consistent and comprehensive in following out the requirements under subpart F. And then the last thing about single audits is that they are submitted to the Federal Clearinghouse along with a data collection form. So currently we're in the process now for our fiscal year 18 and uploading our federal report to this Federal Clearinghouse. And what this is it's a public database of all the completed single audits across institutions. So this is a way to sort of look at the reports for any institution that you want publicly. So if you think back to the OIG work plan and their review of single audits, this is where they would go to see, what institutions are having audit issues in their single audit reports. That's why it's kind of important for us to be sort of clean with the single audit report, because we don't want to be identified for any sort of high-risk monitoring by an OIG office. So if you ever wanted to browse the audits happening in other institutions, you can go there and look at it. I think lucky for us in attendance today, Carrie has actually done that process. So a little bit later on, we'll go over sort of the observations that are coming from different single audits across institutions of higher ed. So a little bit more on the compliance supplement. So like I said, the compliance supplement for an auditor it's basically a roadmap or a tool used in performing specifically the single audit. I think aspects of it are important anytime you have any federal programs. So the compliance supplement is a document that serves to identify all the existing important compliance requirements that the federal government expects to be considered as part of the single audit. So without this compliance supplement, auditors would likely need to research the regulations for every program that's under audit. So the supplement essentially replaces agency-specific audit guides and other audit requirements and puts it in a nice little package so that auditors can go through it, conduct a single audit in a more efficient and timely manner. So included in the supplement are the different federal programs, as well as their program objectives, their different processes, and some of the compliance requirements. But it also provides audit objectives and suggested audit procedures that someone like a KPMG auditor would follow. Now the document is very large, pretty comprehensive. So for context, if you were to look at the 2017 compliance supplement, it might be like 1,600 pages long. So I'm not going to go through the entire compliance supplement in too much detail, but I do want to highlight at least the 7 parts of it so you're aware of how it's structured, and then where, if you ever did want to look at it, you know where to go to find the information that you need. So part 1 of the compliance supplement is just general background. So this will tell you the purpose of the compliance supplement, the applicability. It also gives a little short history on the whole Single Audit Act and why it exists. Part 2 of the compliance supplement, this is the matrix of compliance requirements that will identify the type of requirements which are applicable to a particular, very specific program based on a CFDA number. So if you look at the matrix that we have presented here, it would be very similar to this matrix example. But instead of listing it by a cluster program, on that left column, you would see individual CFDA numbers, and then across you can see what kind of compliance requirements might be applicable. So if you have a federal award at your campus and you know the CFDA number, you can go to this compliance supplement, go to part 2 and sort of look, what kind of areas do I want to focus on related to this program, because those are the areas that are going to be the focus of any sort of federal review or single audit review. Part 3 of the compliance supplement lists and describes the 12 types of compliance requirements that the auditor must consider in conducting every audit under uniform guidance. So it also provides some audit procedures to do that and to test compliance. So if you refer again to the matrix on the slide, the 12 compliance requirements are listed across the top, right? Activities allowed, allowable cost, cash management. So part 3 of the compliance supplement will give you a little bit more information on what is meant, by these different compliance areas and things that you might want to consider as you're sort of assessing your internal controls on, what an auditor is going to be looking for when they're testing compliance against these. Part 4, these are agency-specific requirements. So part 4 of the compliance would be like if Department of Ed has specific agency requirements that are expected to be followed under their agency, you would find that listed in part 4. Part 5 would be the cluster programs. So there's a lot of programs or CFDAs that are closely related programs. So they'll have similar compliance requirements. So they'll group them in clusters. So that's the example that you see here, pulled right from the compliance supplement. So the R&D cluster, migrant end cluster, a bunch of different programs underneath those that all have these same sort of compliance requirements. So just an easier way to sort of summarize what they are. And then part 6 of the compliance supplement, this talks about the idea of internal controls. Right? So the compliance supplement is going to say that an auditor, sort of when reviewing a single audit, is required to obtain an understanding of the non-federal entity's internal control over federal programs, sufficient enough to plan the audit. So this will address some of the objectives, principles, and components of having a good internal control framework at your campus. And then part 7, I think, and might be wrong on this, but I believe this is guidance for all other programs not included in the compliance supplement. So that might be sort of like their little caveat that, we got to cover everything. Part 7 would be everything else. So that's the single audit in a nutshell. And then the last type of audit that you might experience here is our own internal audit. So our role is to perform an analysis of business processes, right, to ensure as an organization we are maintaining an effective system of internal controls. Right? So our audit plan is risk-based. So what this means is that we're looking at high-risk areas identified on either the RF enterprise risk heat map. We're looking at the expenditure activity and levels of the different campuses. And we're also looking at the audit focus from external auditors, really to determine what it is we want to review to ensure that we have the proper internal controls before somebody else comes in to look at them. So our primary objective, I think, is always the adequacy of the internal control framework, which then gets us into how compliant we are with terms and conditions and federal rules. And we're also going to be looking at how you're mitigating those risks of non-compliance and promoting accountability over RF activity. So we'll be looking at sort of your key controls, your key processes to understand how are you going about reviewing federal activity, and how are you ensuring that the risk is mitigated to a point where we're not going to be non-compliant in a lot of these areas. Now our goal, although we do a lot of compliance auditing, I think our goal is to move the internal audit function towards this idea of trusted advisor, where we're here to provide guidance in addressing sort of the strategic and emerging business risks and audit risks, and not just be sort of this organizational watchdog. So I think it's important to know that we're a resource to address issues on the front end or issues that are coming up, rather than coming on the back end determining whether or not you're compliant with it. So I just want you guys to keep that in mind as you do your work. And then lastly, I just want to highlight for you some of the areas that are actually on our fiscal year 19 audit plan that you may have already been involved with or will be involved with in the next 6 months. One of them would be sort of the audit of sponsored programs. And I think this is probably the most prevalent type of audit that we do. This is sort of where we go to the campus sponsored programs office and look at your sponsor awards. And I think we test this very similar to how an auditor from a sponsor or from the federal government or even from KPMG's single audit perspective, our approach and testing methodology is very similar, because we're looking to catch some of the things that they may be looking for and they may catch in their audit reports. We also have service centers, where we're reviewing operating units within the campus that provide some kind of service or product for a fee, either to internal customers or sometimes third parties. And really we're assessing the compliance with service center policies and regulations and rate development, making sure that's all in order. We've also more recently been getting more involved in institutional review board audits. And mostly these are going to be audits around the campus IRB administrative structure. and sort of the procedures for review and approval of the different protocols, as well as investigator compliance with approved protocols. And we've done this in collaboration with some of your campus SUNY audit functions as well, and I think it's gone pretty well, and it's an area that I think we're going to move into even more coming into the fiscal year 20 audit plan. We also do some royalty auditing. This is really assessing sort of licensee compliance, not so much sponsored programs oversight of it. And then clinical research, again, something new that we're looking at, and more as sort of the administrative oversight of clinical trial activity, contract negotiations, budget, and protocol development. So those are sort of the highlights of what we're working on internally that you may be impacted on or may experience going forward. So we're going to take a break there. So that was the summary of the common types of sort of post-award audits that we think you would experience here at the RF. So now we have a polling question. And the polling question is, what type of audit on your campus would give you the most panic? What type of audit would you not want to experience at your campus? Is it A, an internal audit? Is it B, a sponsor or agency audit, whether it be federal, state, or private? Is it the single audit? Or is it an audit by one of the OIG offices? Now, this is probably going to be different for everybody. I think we'll give you about 2 minutes to answer it. A lot of this is probably going to be based on what you've experienced in the past. I can tell you that I've been told on more than one occasion that the RF internal audit is the worst experience that anybody has ever been through. So if that's where your head is at, you're not going to offend us sitting here. We have been told that to our faces, and it's fine. I can tell from where we sit in managing audit findings and managing audits across the state. I think state auditors and state-sponsored award auditors are probably the biggest struggle for us. They are frequent. Their audit programs seem to be outdated. The auditors never know why they're asking for a piece of documentation. So I struggle a lot with them. I think Brian probably could agree. So if I was answering this, it would be B for me. But I'm kind of curious from the group what your opinion is.
So Ryan, we have 55% of the group that's voted already. Hopefully people are casting their vote now. Oh, here we go. We've got a surge.
What's it gonna be? So if anybody has any questions on sort of just an overview of sponsor audits, single audits, our own internal audit work, feel free to ask it. Hey, not too bad. Not too bad. So I'm not going to walk out of the room. That makes me feel a little bit better.
That's good.
All right, great. So if there's no other questions, we'll move on to the next slide. Okay. So now I'm going to get into some of the more common audit issues as reported by Health and Human Services, by NSF, by different state sponsors, and from the single audits. And we'll reinforce these in some of the case studies that are coming up. But I wanted to give just sort of a summary of what the common audit issues are out there. So the first one would be this allowable and the allowability about cost and cost principles. And the audit issues for this one fall into, I feel like, a lot of different buckets. One of the things you want to be aware of is this concept of direct versus indirect costs, because I feel like this is commented on a lot when you're talking about a performance or incurred cost audit. with the issue being that institutions are incorrectly charging items as direct expenditures, when in fact they're not direct expenditures. Right? So for something to be a direct expenditure, the cost must be identified specifically with a federal award, right? Or assigned with a relatively high degree of accuracy. So if you're coming across a cost that you're struggling on how you can assign it with any kind of accuracy, it's most likely an indirect cost. So just something to think about. Other audit issues that sort of fall into this category are expenditures that are not either necessary or reasonable for the performance of the award, and the concept of, are they allowable and allocable? So the allowability piece of it, I think, is a little bit more straightforward. So if you're in post-award administration, I feel like determining if something's allowable might be easier in the sense that you can go back to the budget, you can go back to the cost principles in the OMB guidance, and it'll tell you, this is an allowable cost, this is a non-allowable cost, and the reasons why. I think the allocability piece is probably the biggest struggle, because from a post-award administration standpoint, you may not know how a PI is using the materials that they bought, or if they're using it for multiple awards. So there's probably some reliance on the PI when it comes to allocability. So that's an area of focus that I think you wanna put on your campus radar, is how can we really determine allocability when the PI is saying something? And things to look for is, does it seem reasonably tied to this award? Does it benefit the award is being charged? If it's allocated, do the allocation methodologies make sense? I think most audit findings, probably will fall in this bucket. So it's a key one. Now, property management. So property management, so this talks about sort of any tangible equipment that has a useful life of more than a year and has a cost exceeding $5,000, right? Those are the items that we care about from a federal standpoint. And the audit issues that you might run into when it comes to property are, is the equipment being used in the program or project for which it was purchased for? Because we'll find a lot of times, and you'll read through these reports, that the equipment's purchased on one award but used for something totally separate, right? Another big thing with property is record keeping. That records are not maintained properly, including having things like the serial number, the identification number, the source of funding. These things are all required under OMB guidance, with the idea of how can we provide sufficient oversight of equipment purchased with sponsored dollars if we can't even track it appropriately. So that's an emphasis when it comes to property management. And then the last thing with property would be this idea of physical inventory, reconciled with those property records every 2 years. So we've had audit observations I've seen at NC State and New Mexico, MIT, related to property and sort of their proper administration of it. So eligibility is another common audit issue. So when we talk about eligibility, this is all about requirements on the individuals or group of individuals that can participate or otherwise benefit, from the program. And usually eligibility requirements, are based on, maybe the minority group, the income level, first generation, and the audit findings that we've noticed related to eligibility really fall around eligibility determination and documentation. Do you have the proper documentation on how you determine somebody to be eligible or not? And then the amounts used. Are the amounts consistent with program guidelines? Are the amounts being used for people who are eligible under the program? Because they're the ones to benefit when there's eligibility requirements. They're the ones to benefit from program dollars. Next, we got procurement and suspension and debarment. So when I look at the common audit issues for procurement, you'll find audit reports that cite institutions are not following their own documented policies and procedures, right? So for any auditor, federal or even us here in the internal audit team, if we're expected to follow our own policies and procedures. So if we have them, we must follow them, and we're going to be held to them as a standard. Open competition is another big area when it comes to procurement. Open competition, meaning that we're also maintaining the records sufficient enough to detail the history of that competition, that we competitively bid it. Or if we're not competitively bidding it, and we're going with a, say, single or source justification, that's on file, and the determination on why that was made is also on file. And then the last piece for the suspension and debarment, issues that we found when we're contracting with parties that are debarred, suspended, or otherwise excluded from federal assistance, right? We can't do that. So as part of the suspension and debarment process, even before we get into, contracting with a vendor or contracting with somebody else, we have to ensure they're not otherwise excluded from participating in that program. So that's something that I think comes up a lot in these federal reports and single audits. The next common audit issue would be around payroll and effort. And when we talk about payroll or effort, the main issue being, is payroll charges or effort verifiable from entities' records, whether it be sort of fact confirmation reports, whether it be timesheets. If you're going to charge salary and the like to a federal program or a state program, you have to have records enough to verify that the charges are accurate and reasonable. And then this last concept, which I think we might report on in every single internal audit report that we do, is this idea of segregation of duties and internal controls, right? So the idea of segregation of duties is this principle of shared responsibilities over a key process. So the audit issues that you would see come from like a segregation of duties problems would focus on a case where there's one individual who has control over an entire critical process with very little oversight. And it normally happens in campuses that have a very small bench, limited resources, one or two people in the office. You're going to be faced with a lot of risk and audit issues related to segregation of duties. Now, to get around that, we always recommend trying to implement some other compensating control to sort of mitigate the risk of that, because obviously it's not practical to hire additional people to handle the work. So these are some of the more common issues reported. And like I said, when we go over some of the case studies, they'll give you actual examples coming from NSF reports and single audit reports on what exactly was the finding that the auditor was talking about in the audit report. So now I'll stop for another polling question. So we listed a bunch of common audit issues that we found from published audit reports, both from OIG and both from the single audits and our own internal audit work. So now I'm kind of curious from the group, how relevant are these common audit findings in relation to the operations on your campus, right? Are they relevant all day, every day? And say, yeah, we deal with questions like this. We see audit issues like this every single day. It's a challenge. Is it B? Is it more common than you would like, but manageable? Or C, I never see these issues on my campus, so pretty sure you're making them up. So I'd be interested to know sort of how you guys would poll this question. I can assure you, C, is we're not making them up. We've done some extensive research on the published audit reports to kind of pull out these most common ones. And as you're answering the polling question, if you have any specific questions on any of the common audit issues, feel free to use the text box or call in. We can hopefully answer some general questions on individual audit observations.
Okay, we have 20 polls cast so far, so that's 58% of the group. So take another minute here and just let us know what you're thinking. How relevant are these to you?
And if you are at the place where you're like, see, I never see these issues on my campus, I'd be really curious on what are the common audit issues that you're running into, at least from a post-award administration aspect. Oh, good, good. So I think we hit the mark on some of the common audit issues.
Good.
Perfect. All right.
Okay.
So now what we're going to do is we're going to get into some case studies, and how we wanted to do this is pull one audit from the NSF Office of Inspector General and try to walk through the observations. We wanted to touch on a Health and Human Services OIG audit, and then give you a summary of single audits happening across different higher ed universities in the nation. So I'm going to turn it over to Carrie to go over this piece of it.
Okay, so as Ryan said, we're going to walk through these 3 case studies on some potential gaps in internal control structures that led to audit observations and what we can do here at the RF to prevent some of these observations from happening today. The first 2 case studies we selected, one audit that took place at the University of Kansas, and the DHHS one took place here, as we mentioned before. What we're going to do is we're going to take a look at the federal guidance criteria that the auditors used to review the expenditures and do a crosswalk between that guidance, which was 821, and what was required under UG today. We'll focus on these observations themselves to see what actually happened, for the auditor to feel as though that they needed to include this in their audit reports. Then we'll take a look at the tools that we have available here and walk through what can be done to prevent any of these observations from happening and prevent the risk of non-compliance. The third case study for the single audits, we'll discuss some of the most common single audits across the US and work through the same concept. What criteria was used to audit, what was reported, what were the gaps in the internal control structures, and what we can do here to mitigate those observations from happening. We felt that the observations that we're going to walk through are really relevant here because some of the same observations we've actually audited and reported on, and we kind of want to make sure that if we didn't have those same observations, that we would be able to prevent them from happening today. Essentially, we want strong internal controls in place because, let's be honest, nobody wants observations on their audit report. So, the University of Kansas, just to give you a little background, it was performed by the OIG at the National Science Foundation, but the actual auditee was the University of Kansas Center for Research. They are very similar to our structure here. They are a not-for-profit research foundation that help research investigators by providing compliance, oversight, and managing financial services. Like us, they help research investigators by negotiating contracts, handling pre- and post-award services, and administrating compliance oversight. Just to give you an idea of the sponsored activity at Kansas, since the scope for this audit was multiple years, they received about $190 million in 2017. Unfortunately, the 2018 numbers weren't available. And about $133 million of that was federal expenditures. For our purposes, doing the crosswalk between 821 and UG, The criteria remained the same. It was just the circular references that changed. And as you can see, the scope was from October 2011 to September 2014. It included $72 million across 289 awards. And just to give you an idea of what the 72 million was made up of, 27 million of that was salaries and wages, about 7 million was equipment, and about 5 million was travel, material, and supplies. So like I said earlier, I'm just going to highlight a couple of the observations. And these were the two key observations that were reported in the report. What I highlighted here are the observations for equipment and travel purposes or expenditures. And it's just important to remember as we go through the observations that some of these transactions may not have happened had the documentation been available for the reviewer at the time so that they could assess the situation. But for now, let's just focus on the actual audit observations as they did fall on the report. Ryan went through a couple of these observations, or like the key information leading up to how or what's needed for internal controls to be in place so that the observations don't appear on the report. But just to give you a little background of what the auditors were looking for, they were reviewing things like the timing of purchases, especially when they were made towards the end of the award period, how the expenditures were documented to justify the purchase, the benefit of the award, and for specific campus policies, the requirements adhered to. After reviewing the selected transactions and going through the federal regulations and university policies, they noted unreasonableness surrounding equipment and travel transactions. Just real quick, I just want to point out that equipment, like the actual term equipment, was a broad category. They actually combined equipment and materials under this, this term equipment. So just keep an open mind as I walk through the observations that they might not necessarily be larger capitalized type items. They're smaller observations like or expenditures and definitely lower than our threshold. Some of the examples could have been like electronic type products like lasers and data recorders, and they even lumped software under this category. The travel transactions were actually pretty standard. There were lodging, meals, meal reimbursements, airfare, and conference expenses. So what did the auditor actually report on? At a high level, reasonableness and allocability were identified as issues. Equipment and travel transactions were processed near the end of the award without proper justification on why it actually benefited the award. And if an expenditure was fully allocated to one award, or if it was even split between multiple awards, the descriptions provided on why it was allocated to that award wasn't reasonable. So basically what the auditors were looking for in the beginning, they ended up actually reporting on in the end. But for now, let's just go through the unreasonable equipment a little further. So to start, we're going to do the crosswalk between A21 and UG. And as you can see, the regulations that were audited against are up there, and then you can see the kind of crosswalk between that and what the CFR looks like today. And as I mentioned, it was just really the circular reference that changed. What was actually required was essentially the same criteria. So what was the criteria? A cost must be necessary and reasonable for the performance of the award. A cost is allocable to a federal award or other cost objective if the goods or services involved are assignable to the award in accordance with the relative benefits received. And if the cost benefits two or more projects or activities in proportions that can be determined without undue cost or effort, the cost must be allocated to the products based on the proportional benefit. So what does this mean? Well, if you're assigning an expenditure or reward, you need to document how the expenditure is identifiable to that specific project. Was the cost incurred specifically for that project? Or is the purchase necessary to complete the work committed to be performed under the award? Is it kind of like a field test? Like, I can see where this is benefiting the award. Let's just throw it on here. I know there's a lot of money left on this award. Also, if the expenditures benefits more than one award, is there a reasonable allocation method? Does the method actually make sense? This criteria all has to be documented and retained to ensure that you have complied with the required regulations. If proper documentation isn't retained, an auditor can't get comfortable that the regulations were actually followed. So that's where the observations fall. Lack of sufficient or insufficient documentation also leads to observations. But let's go through some of the gaps that could have happened leading up to this, or definitely happened on their audit reports. So the auditor actually identified 2 purchases that were not necessary or reasonable considering the limited amount of time remaining on the awards. Specifically, the auditors could not get to how the transactions actually benefited the awards. These type of transactions are automatic red flags to the auditor because proving that the purchase is reasonable and allocable can be very difficult to establish when there's only 3 months remaining on the life of the award.
Oh, I'm sorry, we're getting some feedback. I'm not sure why.
That her salary is going to be redistributed because
This is juicy.
Okay. All right. So
That's the right slide, I'm sorry, my bad.
So the auditor noted a $35,000 electronic purchase that was fully charged to the award, but the award expired 1 month after the purchase. The auditor questioned how the laser was allocated to the award because essentially they were only able to use it for 3% of the award. So they were just questioning how it benefited the award with no goals mentioned in the final projects also. He calculated the 3% by dividing the total number of days left on the award to the total number of days in the total award. Another purchase related to the topic was the auditor questioned costs related to the purchase of software and 2 data loggers. This purchase was made 10 days before the end of a 9-year award. The auditor stated that the software and equipment had a useful life beyond the end date of the project and couldn't immediately see the need for the benefit of the award. In both cases, the auditor would have been okay with the purchases had they been properly allocated to different awards, not just put it fully on that one award. But because it wasn't documented or split, the observation stood and the transactions did not fully benefit the award. The auditors identified another transaction that was originally made to correct a misposting to an award. The correction was made, but the audit determined that the cost shouldn't have been put on that new award to begin with. The documentation provided did not adequately show the benefit to the award, and additional documentation couldn't be provided at the time of audit to justify this as well. So the auditor, in the end, requested that charge to be taken off the award. Finally, the auditor noted that costs should have been split between, or the costs that were split between 2 awards with that was, they didn't have appropriate allocation methodology to support it. One Microsoft microscope was allocated 40% to an NSF award, but the calculation on how the 40% and wasn't included in the documentation. So because of this, he felt that he didn't realize how it got to the award. These observations could have potentially been eliminated with appropriate documentation received at the time of review. Document how the purchase benefits the award, how it was reasonable, the allocation methodology. Basically, what can we do to prevent anything like this from happening? What do we have at our fingertips? So we have a few things. We can determine and document if the equipment has actually been identified in the actual budget. Is there a line for the equipment, or does the award specifically detail the equipment? If it is a quick description like as stated in the award contract or budget would have been sufficient if it was included on the purchase rec or like the invoice or anything that was submitted. It just quickly redirects the auditor or the reviewer for that matter, where you identified that particular purchase to the award. We can perform a stronger review or scrutiny of high-risk costs. As I stated before, red flags for auditors are purchases made at the end of the award. Because of this, reviewers should put more scrutiny on these types of transactions and even consider the related risks when going through the documentation. As a reviewer, are you questioning the PIs on purchases made towards the end of the award and how it benefits the project? Are you asking for more information, including that information in the file? Like if you're asking for clarification on something, are you putting that clarification, either email or a quick description of your conversation in that document? Are you taking a step back and applying a reasonableness approach to your thought process of how the expenditure actually benefits the award? PIs, are you anticipating questions that the reviewers might ask? And you might have to document those types of things in the file before you submit it. If you have items that benefit multiple awards, you should document if the allocation methodology is reasonable. Does the documentation provided include a calculation on how the methodology works? Does the calculation make sense? Should you be using labor distribution percentage, or should you be using a percentage based on the number of days remaining on the award, and what project's going to use it after that award ends? These are the things that you should be working through when you're allocating between one award and the next. The RF also has guidelines that help you work through what should be retained. This guideline is called Documenting Purchasing and Payment Activities. This guideline provides some examples of what documentation should actually be retained in the vendor file, like sponsor approvals for specific purchases, invoices, detailed receipts, parties involved. Is there a reason for the purchase and the benefit to the award documented on the purchase rec? So the reviewer has the information up front before payment is made, and actually allocating it to a certain award. Just remember, based on the information in your hand, do you have any additional questions because you cannot get to that benefit, allocation method, or reasonableness of the project? If you do have questions, just make sure you go back and you have conversations to resolve any of that. Do either of you have anything to add to that before I move on to the travel? Okay. So again, we're going to do the crosswalk between A21 and UG so that we have an understanding of the criteria the auditor was referencing when looking at the selected transactions. As I mentioned before, the concept is the same. We discussed the reasonableness and allocability with equipment. The same situation applies here. A cost must be necessary and reasonable for the performance of the federal award and allocable thereto under those principles. A cost is reasonable if, in the nature and amount, it does not exceed that which be incurred by a normal person, prudent person, under the circumstances at the time the decision was made or the cost was incurred. A cost is applicable to a particular federal award or cost objective if the goods or services involved are chargeable or assignable to that federal award or cost objective in accordance with the relative benefits received. So what does this mean? For a charge to be allocable, consideration should be given to consistency, sound allocation methodology, and appropriate documentation should be retained. For a charge to be reasonable, consideration should be given to the necessity of the expenditure, the advancement of the scope, the consistency with established university policies and practices, and the evaluation of a sensible person. Did they show sound judgment when they were going through the information? Again, this criteria has to be documented and retained to ensure that you have complied with these federal regulations and university policies. So we're going to go through some specifics of the audit and kind of some observations and what were the potential gaps in internal control processes so that the auditor actually had to ultimately put these in the audit report. Along with reviewing the criteria for UG, the auditors actually use the university policy to audit against. In the first example, I'm going to address an example of just that. The auditor noted 6 reimbursement claims were submitted 3 months after the federal award closed, which was against the university policy. The policy stated that travel claims should be submitted within 30 days after the completion of the trip. And I know we have similar policies where it should be included within certain days. In auditing against the criteria for UG, the auditor focused on the allocation methods for travel reimbursement claims. The auditor noted 6 travel reimbursement requests did not have adequate documentation to support the methodology. For example, one cost was split between 3 awards based on summer payroll, but the auditor noted that the benefit or other equitable relationship was not addressed in the documentation. So he struggled getting to how the methodology was actually split. The auditor questioned costs for traveling at or near the end of the award, specifically the reasonableness and allocation or applicability of those awards. One reimbursement was for airfare when the traveler left 1 month before and returned almost a month after the award ended. The traveler specifically stated in documentation an allocation amount to close out the project grant. This was clearly a spend down of the funds, and the auditor felt that the allocation method was not reasonable. Another reimbursement for airfare was for a PI who was invited to collaborate at 2 different universities. The traveler occurred 3 days before the award ended. The auditor stated that these collaborations occurred at the end of the award and couldn't have fully benefited the award. Another example where the auditor questions reasonableness and allocability was related to foreign travel. The auditor noted that the budget did not have a specific line item for foreign travel, and the costs were still on the award. There was no justification in the file or the final report to show why the trip occurred or the benefit to the award. I just want to highlight some points that the auditor also noted when they were going through the documentation. Detailed itineraries to support the collaboration trips and the work that was being completed was not included. How the PI calculated the percentage of allocation wasn't provided. And the extended trips, or if the trip changed mid-course and they added another flight to the trip, that justification wasn't part of the documentation either. Some of these observations definitely could have been eliminated had the appropriate documentation been retained or allocated to the different awards. So if that happened here, or those situations happened here, how could we have prevented these from happening? We have a lot of information in the RF Travel Handbook. It goes through everything, from the use of rental vehicles, reimbursement expenses, for when a traveler is actually still in travel status, international travel procedures, different per diem methods, and what happens in the case that meals are being provided for at an event. Can you request reimbursement for a meal that's provided for at a conference? The answer is yes, you can actually do that, but you just have to make sure there's a reason in the file why you need it, why you're justifying that you're asking for that additional reimbursement. Also, not using a per diem method and requesting actual expense reimbursements for breakfast and dinner is another topic. And providing information regarding pre-travel advances and post-travel reconciliations. I strongly suggest that you actually look at that document and familiarize yourself with the requirements when approving or submitting travel reimbursement requests. The auditor has, or the RF actually has forms that we can do to fill out and submit for request, just to be consistent. The travel payment request form is kind of a catch-all form. I'm going to actually walk through an example in a minute with you on this form, but it basically provides space to document detailed project information, destination and purpose of travel, advanced travel information that includes like flight, vehicle, and per diem. And then there's a section for actual expenses like parking, flight information, car rental, mileage, lodging. There's a similar form to this, but it's a lot smaller. It's called the taxable meal request and authorization form. It provides space to document the destination, the departure and return times, any meal allowances or reimbursements for breakfast and dinner. Both of those forms, though, they actually require the signature of the traveler and any authorized signatures. We also have information from the GSA website that actually can be used when you're completing those two forms. The website provides detailed information needed when reviewing or submitting per diem requests. It provides the maximum federal allowable reimbursement for meals and lodging. It gives you the amounts for the meals and any incidental expenses and lodging by month. The website's fairly easy to navigate through. You can choose the location, either the state or the county, and kind of navigate your way through it. There's even a section for foreign travel, and you can select dates that are either current or you can select historical information. Basically, just remember documentation is key. Do you have all the information that you need, or do you have to go back and request additional information? As the reviewer, do you have everything up front? As the traveler, do you have anything else to consider? Did you provide enough information so that somebody who doesn't have background, they can review it and actually determine that it's allowable to the award and project. Anything else?
Yeah, and I'll just add, I know when I was reading through all of those NSF reports, there were like 9 or 10 of them, there was one common audit issue always identified, and it happened to be travel. I don't know if that's just an easier thing for an auditor to pick out, easier to understand on whether or not it's allocable, rather than looking at some like piece of equipment like a flux capacitor. They have no idea what it is. So travel is a big item. I think it's just easy. It's very easy for an auditor to review that. So it should have all the sufficient documentation in order to make that one
And the
not
RS travel policy is sort of in a revised status right now, and I think it's being issued probably again within 30 days.
Okay.
So all of that detail is in there,
Yeah.
you said.
This
Yeah,
is definitely a lot, and it's broken down by section, and
Yeah.
it's
very clear.
it is clear. So we're gonna go through an example. So this, as I mentioned before, this is what the travel reimbursement request actually looks like. This is the larger form that I was talking about. I kind of broke it out, so this isn't the full thing, but here's an example of what one traveler submitted. I just kind of want you guys to focus on the red portions because I kind of made up all the other stuff. Anyways, so when I was looking for a travel request to show you, I chose one that really didn't have any information. The information was very vague. So as we talk through this, I just want you to kind of think, if you were in charge of reviewing this and you had to authorize this transaction, would kind of like, what would you want to see on it? What types of questions would you ask given this information? So this one right here is a travel reimbursement request for an employee going to a conference. They correctly charged all the project and award information to an NIH award, but it was very vague. As you can see, the destination and purpose wasn't really filled out correctly. The description didn't include what the conference was for or how it actually benefited the award. Was the traveler actually just attending this conference for a particular reason? Were they presenting at it? Were they going to it to collaborate with somebody? Did they actually put this in any of their final reports or any of their reports throughout the thing? Were you able to see that?
We have a couple from the audience.
Sure.
Peter said that he would want to see the name of the conference, a map of departure to destination to confirm mileage.
Okay.
So good stuff, Peter.
Yeah. That's exactly.
You should be training us all on this.
Yes. Come on down.
Excellent.
You're welcome to come visit us.
He must have graduated from a good high school. I know where he graduated.
So basically, would you be able to solely, would you be able to approve it? And definitely the answer is no.
We have a few more from the group.
Great.
Peter, thanks for motivating everyone.
Yeah, Peter.
He blushed in the chat, actually, which is great. Cyrus agreed, name of the conference. Melissa suggested attaching an agenda. And how M. Haas said, how does the travel conference relate to the research award? And Netta said, it's been a minute since I've done travel, but I know we used to require to include a copy of the conference agenda as an addendum to the voucher.
Excellent.
Yeah, that is all, they were all excellent points. You definitely just don't want to submit this. You want more detail behind it. Like even somebody submitted an itinerary to go along with this conference, but that itinerary didn't have enough detail to actually back up why they actually attended the conference.
Yeah, we do have a question from the group too. Willie Don asked, can MD travel to a conference that is different than the award is for? So for example, can you use a breast cancer award for radiation therapy cancer study?
Would need more background on that, but
should that be when they think of you as like your trusted advisors?
Yeah, I think so. So we can kind of research to understand whether or not you can tie it to the applicability of the award objectives and things like that.
It feels like a stretch. Maybe we ask that.
Yeah.
Good question.
All right. So everybody that provided all the document or the information that you would definitely want to see, here's part of that support. So this is definitely a better example. It provides a lot more detail. It states the clear justification on how the purchase was reasonable and applicable to the award. It also includes the actual point of departure and point of return, actual addresses that the reviewer or us auditors can actually type into MapQuest and take a look to make sure that the mileage is correct. And whoever said MapQuest, ding, 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 this actually backs up the total number of mileage. So the 192 drive time up in the top right-hand corner, times that by 2, you get the 384 mileage in the actual expenses. So we like to see this. It's definitely not mandatory that you put this in to back up that mileage, just as long as you have that point of departure and point of return actually typed in into that field. If you don't want to submit this travel reimbursement, this MapQuest, you can actually do your own chart. You can have, and the chart would be actually be a lot better for those if you have to actually travel for one of your projects and you have to go to multiple destinations either every day or every week. You can't really put everything on this, and that little personal car reimbursement doesn't have enough room for you to do it. So if you do a chart and you do columns for starting and ending and the number of miles and the reimbursement rate, and each line item should have a reason for the trip, or if it's kind of like the same thing, somewhere on that form that you're attaching to this, you should kind of put the reason as a whole. Anything else?
I think we're good. Move forward.
All right. Brian.
Okay. Thank you, Carrie.
Sure.
So now we are going to just walk through another case study. As Ryan and Carrie mentioned before, we went through one, and now we're going to go through another one. This is with the U.S. Department of Health and Human Services, Office of the Inspector General. This audit was conducted at another RF SUNY campus, so this is kind of pertaining to us now. And as you know, this could happen at any campus. So we selected this audit because DHS regularly conducts these types of audits at these RF SUNY locations all the time, and we felt it would benefit to explain how to manage these types of findings strategically. So kind of using the same approach that Carrie used for the Kansas case study, I'm going to just basically walk through 2 observations. Federal regulations that applied during the time of audit, which was A21, and then the regulations that applied today, which is the uniform guidance, and why these audit findings occurred and the internal control gaps that were in place at the time of the audit, and then how to manage these audit findings strategically moving forward and to prevent these audit findings from occurring again. So as I go through this audit, just feel free to chime in with your questions or comments, just like you had for Carrie over here. So just feel free to write those in. So basically what this audit was to determine whether the RF claimed federal reimbursement for administrative, clerical, and extra service compensation expenditures as a direct cost in accordance with federal regulations. So basically the audit was to help determine OMB guidance and the costing principles behind these expenditures, now known as uniform guidance. The scope of the audit was from July 1st, 2008 to June 30th, 2009. And during this time period, the RF claimed reimbursement for about $7.7 million in expenditures incurred on 70 sponsored agreements with multiple DHS agencies. Some of these agencies that included, as Ryan mentioned before, it's an umbrella of other agencies, which included NIH, Center for Disease Control, and among others. So there's multiple agencies that fell under this umbrella here of DHHS. The audit focused on 322 transactions related to administrative, clerical, and extra service compensation expenditures, totaling approximately $1.2 million. So that was basically what they were focusing on as part of this audit. So now we are just going to go into the initial audit observations. As I mentioned before, we selected 2 of the audit observations. These 2 observations are 2 of the 5 observations that were initially identified in the audit report. And we selected these because they seem to be common audit findings, like Ryan mentioned before, the common audit findings, how expenditures didn't solely benefit the sponsored agreement, and then extra service expenditures. And we'll get into the specifics of these observations in a little bit here. And it's important to remember as we go through these observations, if sufficient documentation and adequate justification have been provided at the time of approval, the observations may not even have been on the audit report altogether. And as you can see here, the unallowable amount claimed in the right-hand column here, these amounts include direct and indirect costs related to these observations that were in question. As I go through these observations, please know we added a few key points to further explain how to manage these audit findings strategically and to drive our points home a little bit further. So the first observation here is expenditures did not solely benefit the sponsored agreement. This happened because insufficient documentation was provided to the auditors upfront to support how the purchase of the IT supplies benefited the sponsored agreement. There was no explanation for who intended to use the supplies and who had access to this equipment. The auditors were unable to identify if the supplies were solely used to benefit the sponsored agreement and if the expenditures should have been allocated to those awards. Also, the auditors noted that there's insufficient documentation for why the computers were purchased during the last week or at the end of the award. The timing of the purchases is a red flag for auditors, and because this is a reasonable person would believe that the computer should be purchased throughout and used throughout the entire award and not just in the last week of the award. I want to emphasize the word reasonable because this is a very important point that we'll circle back with later in our discussion. The second observation, as I mentioned before, is extra service. And within this observation, the extra service is required when certain conditions are met and an employee can be compensated by a federal award for performing duties that are not directly related to their normal responsibilities. The auditors reviewed extra service transactions to determine if these conditions were met, and we'll get into these conditions later in our discussion. And the auditors found that extra service compensation for one employee was not approved by the sponsor or specifically identified in the sponsored agreement. And as I mentioned, we'll get into these observations further, but I'm just going to go back to the next slide here and go into the expenditures that didn't solely benefit the sponsored agreement. So just like Carrie did for her 2 observations, we're going to talk a little bit about how the observation applied to 821 and how it applies to uniform guidance today, and looking at those differences a little bit further. For the most part, the criteria stay the same between the 2, 821 and uniform guidance, and you can see the references that are provided on the slide if you ever wanted to go back and look at this criteria a little bit further. And then for this specific observation, this kind of touches on what Carrie already mentioned for the observations that were discussed in the Kansas case study. So now just getting into the observation. So under uniform guidance, a cost must be necessary and reasonable for the purchase to solely benefit a federal award. Here again is the word reasonable, and keeping in mind the timing of the purchase is an important component of this reasonableness. A cost is applicable to a federal award if the goods or services involved are assignable to and the award in accordance with relative benefits received. When a cost benefits 2 or more sponsored projects, the cost must be allocated to the projects based on the proportional benefit of each. For instance, number of days the item was used to benefit the award, or the labor distribution of people working on the award and using the equipment overall. So basically, the criteria that kind of covers this observation is for PIs and approvers to ensure that each transaction is supported by justification and showing how the purchase is allocable and reasonable to the sponsored agreement and how the cost has benefit to advance the sponsored project. If proper justification is obtained at the time of approval, an auditor can feel comfortable that the federal regulations were followed, and you might not have an audit finding altogether as you go through the audit process. So now moving to the second part of this slide, we're going to touch on the internal control gaps that could have happened causing these observations. Each campus has controls in place. However, sometimes these controls are not strong enough to mitigate the risks of purchasing. Internal control gaps applicable to this audit observation include proper review and approval procedures were not in place to ensure initial documentation and justification were obtained to document why $25,000 worth of computers were purchased during the last week or at the end of the award. Purchases at the end of the award are huge red flags for auditors because they focus on these a lot during the audit, and it comes back to the reasonableness test that some of the auditors are looking for when they are auditing. So for example, if initial documentation provided for the auditors didn't explain why an award is extended, the auditors would consider the purchase to be unreasonable. This is why it's important to provide the justification and documentation up front so the auditors don't have to question this later on, and you have to further explain this audit finding. And sometimes this is what happens when you're going to the campus is when documentation is put up front, this will help explain the purchase better before the auditors come in and question the purchase. So the auditor also found proper review and approval procedures were not in place to ensure documentation for how the purchase of laptops, computers, and information technology supplies were solely used to advance the work under sponsored agreement. So basically what happened is the auditors came in and found that the documentation wasn't provided up front, so they classified these purchases as indirect costs. The campus has also provided an invoice with no specific justification for how computers totaling about $3,000 were not essential and solely used to advance the sponsored agreement. What happened is that on the purchasing invoice, the justification was purchased computers. So that justification doesn't provide enough detail on what the purchase was used for and how it's applicable to the sponsored agreement. The auditors were concerned that the computers were being used for other awards as well. So they were concerned that the benefits of the purchasing this material and this award was actually benefiting other awards, and this is a big concern, especially if it's not under the same agencies when you're auditing it. So as a response to the initial audit finding, the RF campus followed up with the sponsor and further explained how the computers benefited the award. So basically they said after the original audit finding came up, they further explained that what the computers were used for, and the auditors got comfortable with this. But to prevent this from happening, you want to provide the documentation and justifications up front so they don't have to question this the first time around. Even though the reviewer may have a good understanding of how the purchase benefited the award, the necessity of the purchase needs to be documented and further explained so the approvers and the auditors can understand how the purchase benefits the sponsored agreement. So now we touched on this a little bit. Ryan, Carrie, do you have anything to add to this observation at all?
Well, I think this reinforces sort of what I said earlier. You know, if you're going to focus on an audit observations when it comes to expenditures, that concept of allocability is so important. I feel like if that is, besides insufficient documentation, which is probably the number one audit finding, allocability might be the second one. How does it benefit the award, and how can you prove that it benefits the award? I feel like that is an issue that is just constantly commented on. I don't know if we have a great handle on how to do that. So think about that. Allocability is really something you really want to focus this time.
Thank you, Ryan. Since we just touched on the internal control gaps and what led to these observations, now we're just going to discuss how to manage them strategically and prevent these audit findings altogether. So establishing adequate internal controls helps ensure purchases are reasonable and applicable to the sponsored agreement. There is an increased risk for disallowance on sponsored agreements if expenditures are not consistent with federal cost principles and RF policies and procedures, including adequate supporting documentation. The first thing to do is become familiar with the federal regulations and the RF policies and procedures. That's probably one of the most important things, is understanding the criteria of what the auditors are going to audit against. And that's how you can go and prevent these audit findings from occurring. So as Carrie mentioned in the previous case study, one way to do this is by reviewing RF's documenting, purchasing, and payment activities guidelines outlined on RF's public website. So basically, these guidelines provide examples of key documentation that should be retained within the purchase of the supplies and computers that we just discussed. So providing documentation like sponsor approval of the specific purchases when required, purchase requisition with a description of what the purchase was for, and an invoice or receipt that includes business relationship to the sponsored award and the purpose of the purchase. And sometimes where it's applicable, who would be using this equipment. So for example, if the computers were bought, who's actually using the computers would help tie out and show how it's applicable to the award. Another way to manage these audit findings is to improve procedures around the review and approval process for red flagged or high-risk transactions. A reviewer should ask more questions up front to make sure that the purchase is approved within sponsored guidelines. And as you're going through and reviewing the documentation, sometimes you might have to ask more questions of the requester. For example, why computers are being purchased and how they benefit the award, especially if the purchase doesn't appear to be applicable upfront. A third way is to be aware of the transactions that are red flags to auditors, like I mentioned before, purchases at the end of the award. A reviewer should always question purchases that were made towards the end of the award and apply that a reasonableness approach to determine how these expenditures can be allowable and applicable to the award. Finally, you want to make sure that adequate justifications and documentation is maintained to support how the transactions are applicable to the award in which they are charged. To do this, you can evaluate if the cost should be classified as a direct or indirect cost to that award. Determining if the purchase is solely benefit to one award or multiple awards, and how it should be split amongst these multiple awards if that was the case. So basically, you want to ask yourself, does this allocation methodology make sense for the purchase of that award? So do we have any questions related to this observation at all before we get into one example here? So now what we're going to do is we're just going to go into one example of what was provided as support for a purchase. So this first example is a poorly documented invoice for the purchase of iPads. So when you are reviewing this purchase and it comes across your desk for approval, what would you be looking at to make sure that this purchase is applicable to the award? So what types of questions would you be asking yourself when this came across your desk? To give you a little bit of a background of this invoice, the iPads that were purchased were for a U.S. Department of Education award that was intended to benefit a teacher enhancement program. The entire amount of all these purchases here were applied to one award, and the purchase order, purchase requisition, and the invoice were provided and approved with appropriate personnel, but there was no justification for the purchase and how it benefited the award. So now I'm just going to discuss some of the types of questions that you can ask.
Yeah, we did have a couple from the group. Peter said he would ask if the iPads were in the original budget. KW asked, how does this directly and solely benefit the project? So,
Okay. Yep. So those are kinds of the same things that I was actually just going to mention. So those are very good points that you want to question the requester or the PI to approve this transaction. So you don't want to be approving these transactions until you have adequate justification to make sure that they are going to benefit the award. So like Peter mentioned before, why the iPads were purchased, what they're being used for, how do the iPads benefit the award, and how are they applicable to the sponsored agreement? So those are the basic kinds of questions that you want to ask yourself and the requester before you approve this transaction. So now we're going to look at sufficient documentation of the invoice and the proper justification that is needed for an auditor to get comfortable with how the purchase is applicable to a sponsored agreement. So basically, as you can see here, this justification explains how the iPads were used by teachers to conduct workshops and observe teachers in classrooms. It identifies the part of the sponsored agreement which specifically states the need of the purchase and how it ties to the sponsored agreement. This justification is a good example of what auditors like to see because it answers all these important questions. So is there any other questions or comments that you have related to this documentation before we move to the next observation? Good. Okay, so now we're just going into the second observation that I previously discussed. Just like the previous example, the regulations between 821 and uniform guidance pretty much stay the same. And as you can see here, here are the references between 821 and uniform guidance to get a better feel and understanding of the criteria that was applied to this observation. So under uniform guidance, extra service compensation must be integral to the sponsored agreement. And in general, grantees shall not charge sponsored agreements in excess of a faculty member's institutional base salary, also known as IBS. Extra service compensation cannot exceed 20% of the employee's IBS. However, there are exceptions to this regulation. And grantees can charge sponsored agreements in excess of a faculty member's IBS when the employee's work is across departmental lines or involves a separate or remote location, and the work performed is in addition to the employee's regular departmental load, and the extra service is explicitly outlined in the sponsored agreement or approved in writing by the sponsor. So this is the criteria that outlines what extra service needs to be in order to be approved appropriately. So now we're going to look into things where things went wrong and what caused these observations. So each campus has internal controls in place. However, sometimes these internal controls fail because there's no mitigating controls in place associated with these observations. So basically, what led to this observation overall? Since the employee's extra service compensation exceeded 20% of the employee's IBS, the campus went through the entire process of making sure that the employee was eligible to receive extra service by ensuring the employee's work was across departmental lines or involved a separate or remote location, and the work performed was in addition to the employee's regular departmental load. However, the approver failed to make sure that the budget agreement called for extra service and failed to obtain prior written approval from sponsor. So this is basically what happened and why the observation occurred altogether. Obtaining that approval from the sponsor and notifying them.
Brian, does this happen frequently?
Yes, it actually does. To answer your question, when we look at sometimes when we go to campuses, we see some issues where the extra service is outlined. It's outlined on the extra service approval form that I will get to mention, and we're looking at the job responsibilities. Everything seems okay, but when we tie it back to the award and the applicability to the award, and that's where problems occur, making sure that it's benefiting the ward. And we do see that quite a bit for extra service, because there's a lot of moving parts with extra service. You have to understand the normal job responsibilities. You have to understand the responsibilities that will be performed under extra service and how they benefit the ward, and that's a key component. So we do see that quite a bit at campuses when we go to that, and it is a common finding from what we see. And this was actually noted in a DHHS audit that was conducted at a campus. So yes, we do see this quite a bit, to answer your question. So getting back to it, the auditor also noted that the extra service approval form lacked justification for why the employee's work commenced before the extra service was approved by delegated authorities. So here, when extenuating circumstances were not documented for why the extra service was approved after the employee started working. So basically, according to our policy, we're required to provide justification for why the employee started working before it was actually approved. So sometimes this delay is caused because there's an ineffective review of the employee's job responsibilities and how the extra service benefits the sponsored agreement. So campuses should review the approval process to ensure extra service is approved in an effective and efficient manner to make sure that everything is correct. Sometimes reviewers approve extra service that is similar or identical to the employee's normal job responsibilities, which should be part of the employee's IBS and not classified as extra service. These types of issues are usually identified by auditors when extra service is approved with no justification or description for how the work is different from or in addition to their normal job responsibilities. So now that I discussed some of these internal control gaps, we're going to explain how to manage them strategically. But before I do that, does anyone have anything to add to this extra service topic?
Yeah, we have a question. How granular does the extra service need to be when outlined in the budget? By employee, by function, only aggregate amount for the entire project?
Generally, extra service appointment, I don't think you have to necessarily identify the individual, but the extra service work, and it has to be identified as extra service compensation within the budget. Or it doesn't have to be in the budget. It could come, post budget. If you identify a need for extra service, you can go and get written approval from the sponsor in order to do that.
Thank you, Ryan. So now we're just going into how to manage these audit findings strategically pertaining to extra service. So to create internal controls to help prevent employees from receiving extra service compensation when the nature of their work doesn't meet the eligibility criteria outlined in our policies and federal regulations. These types of internal controls that can be implemented to prevent extra service and audit findings include reviewing RF salary rules and policies when assigning extra service policy, when evaluating, reviewing, and approving extra service compensation, helps the reviewer understand the criteria necessary to approve the extra service compensation. Also, understanding this policy helps the reviewer determine if the work is different from or in addition to their normal job responsibilities. It helps determine if the extra service responsibilities interfere with the employee's regular obligations and if the extra service is integral to the award objectives. As I mentioned, extra service compensation cannot exceed 20% of the employee's IBS. However, grantees can charge sponsored agreements in excess of the faculty member's IBS when appropriate approvals are obtained. Extra service must be explicitly outlined in the sponsored budget or approved in writing by the sponsor, and the approvers must ensure compliance with RFs and campuses' signature authority process, policies, and procedures. It is important to make sure a formal delegation of authority process is established when changes are made and the approvers have adequate knowledge of what they are approving. Also determine if extra service appointments are approved before the work begins. If not, justification should be provided to explain these extenuating circumstances, as I mentioned before. So another way to manage these audit findings is to utilize RF's extra service compensation approval format that I mentioned. This form helps ensure the employee's extra service appointment is appropriate and properly approved prior to the commencement of work. This form documents the employee, the sponsor, and the period under which the extra service is going to be performed. It outlines the department and the job duties, as well as the justification for if the IBS exceeds that 20% threshold. And then at the bottom of that form, there's a space for approvals. These approvals include the employee, the supervisor, their departmental chair, RF or OM, and the campus president or designee when applicable. And then finally, once the extra service is approved and it's properly documented, you want to enter this information into the RF business system. So this policy at the bottom of this page is the RF's Oracle input and monitoring of extra service appointments procedure, and it helps explain the process for uploading this information into the Oracle module. I know this was a lot of information, but does anyone have anything to add or have any questions related to this extra service observation?
Okay, so real quick, we're just going to go through the single one. We do one?
Stop taking a moment to type. All right, so if a sponsor approves personnel costs on an award, does that cover extra service appointments or must it be explicitly stated?
Explicit.
Explicit. There you go. You heard it here. Carrie, I'll turn it back to you.
Sorry about that. All right, so basically, I'm going to go through the single audits, any of these recent observations really quick. Ryan definitely went through the criteria that you need to undergo a single audit. But basically what I did was I looked through single audits posted to the Federal Clearinghouse. They are required, everybody who undergoes a single audit is required to post these reports onto their website. So I downloaded fiscal year 17 and 18 single audit reports from 21 universities to come to these top 4 observations. Some of these universities include Duke, Stanford, University of Pennsylvania, University of Michigan. So a lot of their observations actually landed on what you see here. 2/3 of the auditors who performed these audits were done by KPMG and PwC. And then the remaining 7 were just smaller private firms. So as you can see, the guidance that goes along with these observations for suspension and debarment, some of the potential gaps was documentation wasn't in the file. Either the SAM check wasn't performed timely, or they just couldn't get comfortable stating that, but by looking through the files, that they evaluated the vendor. What you definitely need to do up front is you need to make sure that all your files actually have that the SAM check was performed, and it's available for anybody to look at. You can look at the criteria, the UG criteria, or you can take a look at our selecting a vendor or independent contractor guidelines to go through this process. But basically, it's key to know where to look. The RF guidelines actually gives you a list to subscribe, or to search, or a website to search for specific vendors. You don't want to go around the process and just go through a list of vendors that you like to use, like one of the actual observations came here. Procurement, some of the observations that were noted was sufficient documentation to justify the competitive bidding at the time of purchase was not retained for transactions over the selected threshold that was required under UG, or the university process was not applied and procedures were not followed. The bidders bypassed the vendors selected. Again, But the procurement policy actually outlines everything that you need to do. Some of it's like a step-by-step procedure. It actually shows you the criteria for bidding requirements, like 10,000 to 250,000 requires 2 minimum or verbal bidding. Anything over 250 requires a minimum 3 bids. We definitely focused on vendor payments and procurement cards when we went through our transactions. Just make sure that when you go through your procurement cards that you actually follow the RF policy or your own campus policy. I just can't stress enough about the allowability, and reasonableness, and kind of documenting that. Some of the same stuff that was on these audit observations we've already touched on, and it's just it definitely has to go along with our, if it's going to be on one award or if it's going to be on both awards, you definitely have to document the reasonableness. And the other one was the timing of the procurement card reconciliation. If you have to get it done within a certain number of days, whether it be right at the 30-day marker, within 15 days after you get your bill, just make sure you adhere to that policy. Equipment and property management, we see this a lot. It came up on, I couldn't tell you how many of the 21 observations, and we report on it too. The criteria, our property handbooks, they go hand in hand. You just want to make sure that when you perform an audit or an audit of all your inventory, your actually physical inventory count, that it's documented. If you hand it off to 5 different departments, make sure those 5 departments actually write down what they observed and what they didn't observe. If they couldn't observe one, it has to be documented in the procedures that followed up on it, saying that you looked at it at X date and you still couldn't find it. A lot of the observations that occurred on the single audits had to do with that. It just, the inventory, by looking at the inventory counts, they just couldn't get a reasonable feeling for that the total inventory was counted. And the management system, that would be our RAMI. Either a disposable was made and it shouldn't have been, or an asset should have been disposed of, or the assets were either overstated or understated based on just plain error, or plain there was a tax adjustment that just wasn't reflected in the RAMI system. The OMs are responsible for inventory, even though it's done at the property management office. They are responsible for this. So OMs, just make sure that you actually see a physical copy of the inventory and you're comfortable enough with what you're looking at, that every federal asset was counted. The property management handbook actually goes through in step-by-step. It has a section for inventory, it has a section for maintenance, it has a section for disposals. It even has a section where it's a link to the user guide. So if you don't know enough about the RAMI system, you can navigate your way through it.
Carrie, can I just ask a time question here? I know we're sort of at the end. We got a couple minutes left. Do you need more time? So
I think we have one extra slide that we can breeze through in 2 minutes and like pull the questions.
Okay, all right. It looks like there's a question.
Yeah, it might be a good time to do the question as it actually relates back to our extra service conversation. So Martina said that her current internal practice, and she's from UB, is to have the prior approval on extra service based on the internal audit recommendation. But recently she had a case from NIH that NIH states that per their policies, this wouldn't require a prior approval request, as the project does have rebudgeting authority, and you've demonstrated that, and his extra service would not affect the original scope of work. And she was wondering, in that case, what would you recommend?
Well, I guess if NIH has, specific requirement or specific, policies where they say under certain circumstances, right, you don't need to come back to us as an agency for prior approval, I would follow that. I think OMB guidance in general says explicit approval in writing. But if an agency has something, saying, we're going to waive that, you don't need approval from us to do that, we're going to allow you to do it probably within a certain threshold, I would follow the agency guideline first.
Great, thank you.
Okay.
So I'm gonna breeze through this only because we gotta go. We're actually out of time. So this is kind of the steps that we wanted to go through. That if you actually did have audit observations, what would be the process for addressing them with the auditor? Hopefully you'll never have to go through this again because now you're all going to be focused on internal controls. But just very quickly, the very first step is to determine the appropriate team. Obviously, a collective experience of the people around you is going to put you in a better position. So the appropriate team, depending on the observation, it might be the PI, obviously someone from the sponsor programs office. But I would also encourage you to include us in the process. I think we've become very good at sort of handling audit observations with external people. You want to evaluate the auditor's observations. So what this means is really understanding, what is the criteria that they're citing? What is the actual observation they're citing in relation to that criteria? And sort of, is it a compliance issue or is it like a documentation issue? Because how you handle that, determining whether or not it's a compliance issue or a documentation issue is going to go into sort of how you move forward with it. And also look at old audit reports. Was this previously reported and how was it handled? Talk to your colleagues across the different campuses. They may have been audited under a similar program, and how did that auditor deal with it? I think audit precedent sometimes actually helps us negotiate findings away. If another auditor didn't touch it or said it was an okay methodology, we can kind of use that when they're doing a similar review at another campus. Focus on auditors' methodology or ambiguity in the criteria. I'll be the first to say auditors don't always get it right. Sometimes there's a misunderstanding on what the criteria is and how it's applied to your award. So it's okay to sort of look at the criteria and look at whether or not the auditor is sort of applying it correctly. Or if there's other guidance that kind of supersedes or offers some sort of alternative that you can use to say, look, we're following things, reasonably and to the rules. Ensure we know the most. So anytime you're going to kind of go challenge an audit finding or defend an audit finding, you probably should know more than the auditor, right? These are your programs, these are your processes, these are your policies. I think auditors are generalists by nature. So you should go in there knowing, more about the program, know more about the documentation than they do, because I think it would put you in a better position sort of negotiating the observations. And then when you get down to negotiate the observations, your first question you want to be answering yourself is, what do I want to challenge? Some of the observations may in fact be legitimate. And you want to wonder, do I really want to challenge these things, especially when they're low risk, no impact, and focus more of your attention on things that are a little bit more significant. If you go in trying to challenge every little thing, I think the process is going to be very hard on you. And then sort of lastly, document the entire process. This is going to help you in the future. I always go back to previous audits to see how we handled it, what the auditor said, what we said. And I think it really kind of helps alleviate some audit issues and audit reports currently. So that's the high level, but if you're going to take anything away from this, just call us. We are going to help you go through audit observations, help you defend audit findings. I'm very good at going through criteria and finding the loopholes.
Thank you, Ryan. Wow, this was so informative.
Sorry, we don't. Oh, so we have the last polling question.
Sure, go ahead.
If you don't mind.
No.
So now we're just going to ask the group, how would you evaluate the internal controls at your campus? Now I can't even read it right now. How would you evaluate your campus internal controls to strategically manage common audit issues, right? Are your controls so amazing, that internal control monuments are probably going to be erected in your honor? Is it B, are you adequate with your internal controls to mitigate the significant issues? So at least maybe you'll get a medal out of this. Is it C? Do you have controls, but you can definitely see a need for improvement in key areas? Or D, let's just say, I hope we never get audited. So I'm kind of, and I think these are anonymous, right? I don't know who's saying this, but we're kind of interested in how you think your internal controls are. And if you do fall in the D bucket, certainly privately reach out to me. We'll get you to a bronze medal at least, I hope.
Good. We've got half the group who's cast a vote here. Just wait another 15 seconds or so.
All right, go ahead.
Like your everyone's a winner
They-
banner.
Well, not everybody's a winner. And I think, is that, we have one more slide, are we good? No. Oh, and these are just some emerging challenges and trends that sort of we're looking forward to in the internal audit plan, focusing on the procurement thresholds. I know those have changed recently. We're going to be looking more around sort of export controls, clinical research offices, changes in the common rule, payroll confirmation. So as people kind of move away from the effort reporting concept, you know, what's going to replace it, and then program income. I put program income on here only because I noted it on the OIG work plan, and I don't know what they're going to do with it. So now it's on my radar. I think we're done. Oh, and then, you know, at the end, in the chat box, you know, if you could just kind of put what you think are some emerging challenges are from an audit perspective in the post-award administration, I think that would help us sort of as we evaluate, you know, what our focus on, you know, different internal controls would be going forward. And then I think that is the last slide.
Do you want to see what the polling answers?
Well, these are
were?
from the text box, so they would have to write these in the text
No,
box.
I mean the previous one. Did you see it?
Oh, yeah,
I think we
saw
did,
real-
yeah. I think we had at least one person.
There you go.
Thank you. I hope we never do. I like it.
Good. Okay, so I think like Brian said, that last polling question, if anybody want to use that in the chat feature, that'll help them going forward. Thank you very much, Ryan, Brian, Carrie. This was excellent.